Hello and welcome to Blocks Live TV. Today is Monday, February the 4th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo and 3:30 p.m. here in Malta. We'll now join with crypto experts Kevin Murcko of Murcko and Jason Fernandes of AE Token. So both, thank you so much for joining us on the line today. It's great to have you both here with us. I'm going to jump straight in and I'm going to direct the first question, starting with you, Kevin. So volatility continued trending lower during the most recent weeks, while cryptocurrency markets remain near the 2018 lows. What are your views on this recent stability that we have seen?
Hi, thanks again for having me again on the show. Appreciate it. Before I get started, to be honest, I think that the market itself is so segmented, that the crypto market in and of itself is so segmented that at the end of the day, you don't see normal, let's say, market trends that we see in other markets or more liquid markets. Here we have two large markets. You have your exchange markets, and you have what people commonly the misnomer that people use, the OTC market. The entire market's OTC. But when you have OTC markets, which would commonly be referred to say as dark pools, where individuals trade back and forth without actually touching the underlying market, as we get more institutional money into the space, that's generally that money goes into those dark pools, which means that it's not publicly shown. So what happens is you basically use cases and smaller fundamentals of the type of market. So until we see larger use cases, until we see let's say less than segmented market, this type of volatility fluctuation is probably.
And Jason, I'm going to turn the same question to you. So what's your views on this recent stability that we have seen over the weekend? And I'm just going to stop you there. Sorry, we're having a little bit of a difficulty in just hearing Jason. I'll go and ask Kevin another question and hopefully we'll be able to hear you in just a second. So Kevin, turning back to you, while most analysts speak of a bearish crypto market, others prefer to call it a trend of correction, which should be seen as positive and even necessary to weed out the bad crypto projects and stabilize in the market. So Kevin, what's your opinion on this issue?
I would probably go with the latter, that it's rather than a bear market. We saw such a large bubble pushed mainly by participants towards the end of 2007, 2018. And right now what we're seeing, really, the market is trying to find their true value. So I agree with the correction. I do think that this correction will probably continue, as I said with the first question that you asked, mainly because it's very hard right to correlate value. So normal markets correlate values to some underlying share or underlying value. And here in the crypto market, at least that mainly through 2017 and 2018, we saw correlation heighten and almost nothing. And now the market's trying to find true value. So again, I agree with the latter, and I do think this trend will probably continue for the next, probably throughout 2000, maybe towards the end of 2018, once regulations starts to become more prevalent in the market, we may start to see the more correlated values, and will change a bit how function.
Fantastic. And I'm just going to check in with Jason and just see if we can hear you on the line. So Jason, can we hear you on the line?
Yes, maybe.
Fantastic. Yes, we can. Okay, so I'll ask you the same question that I've just asked Kevin, which is, while most analysts speak of a bearish crypto market, others prefer to call it a trend of correction, which could be seen as positive. What do you think of what we're seeing at the moment?
So I think calling it a necessary correction would not be accurate. I think the correction should have run its course at this point. I think there are plenty of qualified crypto projects with great teams that are just unable to find and raise funds, and that negatively affects the amount they're able to throw at development, and that's the rate forward for blockchain. But I think the key thing you'll begin to see as the market stabilizes is a consolidation of companies. So similar to what we saw like soon after the dot-com crash, where you'll see smaller exchanges closing or being bought up and copycat ICOs ceasing to exist. But if you go back to the dot-com bubble, we saw a few players emerge, like the Amazon, eBay, Google, etc. And I think you'll see this happen in crypto as well before the recovery. I do think it's about at least a couple quarters away.
Great, and now the BACT, which is scheduled to be launched later in the first quarter, will settle Bitcoin future contracts physically. So Jason, do you think this could affect the market positively?
Well, so I think, yeah, I do actually, because if you look at the existing Bitcoin futures exchanges, the CME, the CBOE are cash settled. That means that contracts are settled in the U.S. dollar and not Bitcoin. And so so essentially, in contrast with backed, those are actually settled in Bitcoin, which means that they would create a demand for Bitcoin. And because of the scarcity caused by the popularity of backed, you're going to see basically the price of Bitcoin go up because people are going to be buying more, and the price and there's a scarcity because the institutional investors are buying it up.
Fantastic. And now, Jason, I'm going to stick with you. Sorry, we did have some difficulties hearing Kevin on the line. So, Jason, sticking with you, experts believe that the bear will continue to dominate at least throughout the first 2 quarters of 2019. Others believe there will not be a reversal until 2020. Can you add any insight to these predictions?
Yeah, so I think most of those bearish predictions come from people that are looking at the dot-com bubble and essentially trying to extrapolate what will happen with crypto. But I think the contrast was the dot-com bubble took a while to gestate and it was slow to grow. And when it exploded, the market was slow to bounce back. So in fact, some would say the tech markets are only just now recovering from the crash. So, but if you look at crypto in contrast, this has all happened on a much more accelerated timeline. So it's not out of the way to assume that maybe the recovery will also happen much sooner.
Okay, so that's quite optimistic then from your side. So various experts also speak of a bottom where buyers are waiting to en masse and invest. Many have mentioned Bitcoin dropping to around $2,400 US. Is that reference point to the bottom? If not, what do you believe the bottom to be, Jason?
So I think, various numbers have been bandied about. It used to be said that whales had buy orders in at 3,500, then that went to 3,300, and then people started talking about 3,000. And I think it comes down to the fact that quite a bit of the bubble was due to weekend investors sort of dabbling in the new market. The next wave will be different because it will start from institutional investors and then find its way to general investors as FOMO starts creeping in. So you're going to start seeing that trend reverse.
Great. And now, Kevin, we're going to try and see if our connection's a little bit better for our next question. So many investors are placing hope of a crypto market recovery on Bitcoin ETFs. Why is the approval of ETFs so important to the cryptocurrency market?
All right, before I jump in, just making sure you can hear me, and I'll jump into my answer.
All good.
Okay, perfect. So I think a lot of people, and Jason touched on this in the 2 answers that he threw out, that there's a lot of people that look at this market and try to make correlations between other markets. When it comes to ETFs, it really depends on how the ETFs are structured, on how they're going to affect it, right? So at the end of the day, I think a lot of people don't look at the details and they just simply look at the topical news article that talks about ETFs. And they just kind of run with it. At the end of the day, though, if they're structured, built on synthetic or cash-delivered liquidity, rather than actually physically delivered underlying, whether they're futures contracts or actually buying Bitcoin physically, and they're not doing it inside a dark pool, then it can, most definitely will, affect the market price because people will be coming in to buy these assets. There is scarcity, as mentioned by Jason, which means the price will eventually go up.
Great. And now, Jason, I'm going to turn to the same question and see what your thoughts are. Why do you think the approval of ETFs are so important in the cryptocurrency market?
So I think it's hugely important because basically the introduction of ETFs allow institutional investors to invest in the way that they're used to investing, and without having to essentially buy a wallet or invest or essentially get coins or mess with all these weird numbers and the weird way of buying Bitcoin. It's essentially they're used to buying ETFs, and especially if you look at the fact that it's not cash settled and it's actually settled in physical bitcoins, that again, like I was just saying, creates a scarcity in the market, and whenever there's a scarcity, you're going to have a price go up. So we're hoping that it'll be elastic upwards because more people are buying Bitcoin by virtue of this on ramp through institutional investors via the Bitcoin ETFs.
Great, and that's an interesting point. Now, I'm going to ask you both this question. Kevin, I'll start with you just shortly. What's fantastic is that you're both joining us on the line, Kevin from Estonia and Jason from India. So I'd love to ask both of you separately, and we'll start with you, Kevin. Are there any other significant market moves that you're expecting during this year and any market-moving events that you're expecting this year?
I'll take the latter part of that question first. So market-moving events, I think 2019 is going to be the start of, let's say, probably 2 years worth of lots of regulatory pushes around the world, where regulators start to apply existing regulation into the crypto markets. I think that's going to cause many players that haven't been able to get into this market to be able to get into this market, like the ETFs that Jason just mentioned as well, and that you asked a question about, as well as a myriad of other products, synthetic products, non-synthetic products, cash delivered, actually physically delivered products. And that's going to expand the market by leaps and bounds. So that would be the event that I would be looking at the most. When it comes to just predictions, I think for many crypto assets, we need to establish use cases. And as there are newer projects coming down the line that are more mature than they were a year and a half ago. So once we get a major use case, then I think we start to see some of those, let's say, smaller crypto assets also start to push up in value.
Great. And now, Jason, I'll turn my attention to you. Are there any market-moving events that you're expecting this year to impact the markets?
So I think a lot of crypto adoption ultimately comes down to on-ramps and the ability for crypto to get from traditional financial markets into crypto. And so ultimately, things like credit card, crypto credit cards and crypto debit cards where you have access to your crypto and you're able to spend it similar to like you would on a normal credit card. Those sort of things are going to make a huge difference. And then you see the other look on the other side. You have Binance recently. They're starting to accept credit cards. So that sort of offers both sides of the equation where people can basically buy crypto using credit card and then also spend that crypto on a credit card. So that sort of highly increases the liquidity, and that's going to really encourage adoption in the future. Beyond that, again, Bitcoin futures, ETFs, and ETNs are things that we're looking at to be big in next year.
Fantastic. Well, both of you, thank you so much for joining us on the line from your respective countries. It was an absolute pleasure to speak to you both. Thank you very much for your time today.
Thank you, Jessica.
Thank you. Well, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto markets. The total valuation of the digital assets is virtually unchanged at $113.5 billion. Trading activity has picked up the pace slightly, and the 24-hour traded volume indicator edged above the $16 billion mark. EOS is still the only top 5 asset that's in the green as it trades at $2.40. Tron, however, remains the strongest performer among the top 10 virtual currencies, with a gain of nearly 4%. Well, that's all for this Monday's Crypto Now live show. We thank Jason Fernandes of A Token and Kevin Murcko of Coin Metro for their expert analysis. We thank you, the audience, for joining us and invite you all to accompany us every weekday at the same time.